Let's just talk about it. It seems like a lot of investors are kind of waiting for this Fed meeting, but there's also like a slim hope we could see that jumbo cut, a 50 basis point cut. How important is this cut for the markets right now?
Well, the market needs this cut just because psychologically, if we don't get it, there'll be a lot of disappointed people. And so, of course, the Fed, I think, has no desire to upset the majority of people who are expecting cuts. So the vast majority, I mean, it's literally what you're showing is 100% plus attitude toward cuts. So they're not going to mess that up. But on the other hand, I think they're going to temper enthusiasm about future cuts. Let's call it a hawkish cut, for lack of a better word. And my reasoning there is inflation is not under control. If you look under the hood, inflation measures have all been creeping up. Well, PPI took a bit of a downturn, but core PCE and CPI, core CPI, have been edging slightly higher, as you're showing there. Moving closer to 3% annualized than 2%. And so this is where I think they're going to sort of temper enthusiasm about future cuts.
All right. When we're looking at the broader market, we have a lot of concentration when it comes to major averages. NVIDIA obviously has a lot of weighting this morning under some pressure. I was talking to a lot of people last week. They kind of saw these U.S.-China trade talks as almost a non-event. Now it seems like with this investigation into NVIDIA, it could mean something for the markets. How do you view NVIDIA and the chip sector being under some pressure? Of course, chips have been one of the catalysts for the market moving higher in recent weeks.
Well, for starters, I mean, the trade talks are back and forth. I mean, and so we've been trying to apply pressure to China, we being the U.S. And so it's not unreasonable to think China is going to look for pressure points to push back in other regards. And so I think that's how you can get the contradictory statements of trade talks are going well, but by the way, NVIDIA's under major pressure along with other chip stocks. I think this is going to be a back and forth. Trade is a very fluid situation. I do think back to the first Trump administration when a lot of times we'd wake up at this hour or sometime earlier, a little bit later for many of us, and say, you'd read that trade talks went well, even though there weren't necessarily trade talks. There were just seemed to be planted stories. Today, at least, I'm very encouraged by the fact that there are actually talks going on, and we're hearing concrete news coming out of an actual sit down between two leaders.
Steve, speaking of people waking up right now, I just want for people just kind of joining us. NVIDIA under investigation for allegedly violating anti-monopoly rules in China, preliminary investigation. We're seeing some other chip names also in focus right now. Analog devices down about 2.5%, TI down about 2%, NVIDIA itself down about 2%. And just a minute ago, we showed the S&P futures. They're lower now. They were just fractionally higher, but they're lower. I want to come back to where you're seeing opportunity in the market right now as we go into what everybody's expecting to be a Fed rate cut. One area that really seems in focus right now are financials. Looking at the financial sector, about 1% away from a 52-week high. How often do we see a rate cut when the banks and the other financials are doing this well?
Well, you do see it from time to time. And the reason being the banks are anticipating a bit of a steeper yield curve, which is very good for banks. Remember, their basic business, particularly the ones that outside of let's call them the money center banks, their basic businesses borrow short, lend long. They're borrowing money at the short end of the yield curve through time, deposits, checking accounts, et cetera, and lending it to corporations, to mortgages, et cetera, et cetera. So if the yield curve steepens a little bit, we're talking either the 2 to 10 spread, which you have on the screen, or the 3-month 10-year spread. And as you cut rates, that benefits that spread, that benefits their bottom line to a large extent. So I think the question here is, have they gotten ahead of themselves? I think in the big bank case, maybe a little bit. I think in the small banks where you've seen a bit of a rally as well, like the KBW, that kind of, that KBE, that kind of thing, KRE, sorry, that kind of thing. You still may have a little bit of room to run if the rate cut cycle continues. On the other hand, if you get a bit of a hawkish tone to that pulls it back, you can get a bit of a pullback in some of these names, which have been performing rather well.
You know, I was just talking to you about some of the trade pressure on tech right now, specifically NVIDIA. What do you think about the tech sector in general? You're seeing a lot of headlines that people are worried about a bubble, specifically after the Oracle results that really boosted the tech sector broadly. But now people kind of worried, a lot of investors worry that some of that is a bit of hype, especially because a lot of the projections from Oracle are coming from one customer, OpenAI.
Yeah, that was a stunner because obviously the market loved the fact when it first was reported, and this wasn't obfuscating. I think they just put it out and said we've got this huge backlog, and everybody, of course, was thrilled by that. It originally was reported as coming from three customers. Then it turns out really the lion's share was OpenAI, who is essentially a cash burning machine at this point, despite all their advances with ChatGPT and stuff like that. And so the question is, if they're going to spend $300 billion at Oracle, that implies $60 billion a year. Obviously, it's not going to be spread out evenly, but that's a lot of a cash burn for them
Right.
to
But just Steve, really quick,
overcome.
'cause we got to get to the break.
Sure. Sorry.
Tech,
And so,
overweight, just kind of seeing it as underweight. I mean, how are you seeing tech right now as we go into this rate cut? Do you see the market broadening, or do you see money going into tech?
I'm going to stick with my usual mantra that's been working to a certain extent, and I think it more applies now. Don't fight the tape, insure against it. Volatility is relatively low. We saw in April that tech vastly underperformed when the market fell. You don't want to fight it because it's necessary, because the trend is still working its way higher.
Okay.
It's a tough one to fight, but you may want to buy some insurance, especially ahead of the Fed meeting.